After 6 years in the managed fund wilderness, he's back. Chris Cuffe is the man behind Third Link Growth Fund, an outfit that reckons it's all about socially responsible investing. And he's convinced some of the best minds in the business to offer their services for a good cause. To tell us all about it is Chris Cuffe, who joins me in the studio right now. Chris, thanks for joining us on Switzer.
Thanks, Peter.
Mate, what are you doing nowadays?
Well, I do a number of things, one of which is manage this fund called the Third Link Growth Fund. But on top of that, I'm a director of Uni Super, the education
A good performing super fund too.
Performing super fund. I've recently joined another board in the financial planning industry, and I just do a variety of things. But particularly I like helping out a group called Social Ventures Australia, which is a non-profit organisation I've been associated with for a few years.
So is the fund linked to Social Ventures as well?
It is linked to it in the sense of it's a relatively normal managed investment scheme, but the management fees I earn from running the fund are all donated to Social Ventures Australia, which, as I say, is part of the non-profit sector.
So what does Social Ventures do?
Social Ventures Australia does a number of things. Its main activity is to help other non-profit organisations, so other charities, to do their thing better and more efficiently. So we help them with their strategic planning, we look at their governance structures, their fundraising structures, and we really try to help organisations that we think are going to make a real difference just to get there a lot quicker.
So have you, in a sense, headhunted people with knowledge and influence to assist you to help these not-for-profit funds actually, charities, do very well? Yeah,
well, it's a bit like that. Social Ventures Australia itself has a majority of its staff have come from the business sector. So people in the finance industry like myself, but professional marketers, lawyers, accountants, as well as people from the non-profit sector, and they've come together to try and help other people with the disciplines of running a small business, which these non-profits are, but to really try to get a lot more structure and open doors for them.
Okay, let's talk about the fund, the Third Link Fund. So is this a fund like anyone who's watching the program could actually go and contribute money to?
Yeah, Third Link Growth Fund is a managed investment scheme open to the public. There's a product disclosure statement. Like most funds, it's got a $20,000 minimum. And it's essentially an Australian equity fund. But it's an Australian equity fund with two twists. The first is I give all the fees away to charity, as we mentioned. And the second twist is, even though it's an Australian equity fund, I don't have to be invested in Australian equities all the time if I don't think that's the best place to be.
Okay. So let's just, in case people have forgotten, your history is you basically started Colonial First State's wealth management arm.
Yeah, myself and a few others, we started what's known as Colonial First State Fund Managers.
How many years ago was that?
That was in 1988, and that company grew fairly rapidly. About a decade later,
it became well known nowadays.
Pretty well known. It's, I think, now Australia's largest fund manager. So it came from a rags to riches sort of rise after a lot of work by a lot of people, and I had the privilege of leading that organisation.
Were you the chief stock picker in those days?
No, not at all. I was running the business of the funds management company, so my role was to help try and find the best people to manage the investments, and we had a variety of investments across different sectors, and then to make sure we properly administered them, we marketed, and we really gave people a good experience. That's what it was all about, and talk for our shareholders as well. But no, the actual people buying and selling stocks, they were many and varied, and led in the early days by a very talented gentleman by the name of Greg Perry.
Who was a pretty good performer, is that
He
right?
was a very, very good performer.
So have you assembled an interesting dream team behind this Third Link Fund?
Well, the Third Link Fund, I think it does have a very good team in the sense of I'm not sitting there managing stocks myself, but what I'm doing is the money in the fund, I use other fund managers to manage that. So I've selected what I believe are the best fund managers around to get the best results. And that group are there managing the money, and I monitor that. And what they do in turn, they are waiving their fees in managing the money to help get the most through to Social Ventures Australia.
Okay, so someone might be watching this and say, but hang on, didn't I hear Switzer say they're into social responsible investing? Can you get good returns and still be a socially responsible investor?
Well, this is not A social responsible investing fund in the traditional sense. So the fund managers are buying shares in any stocks they like in the Australian and international markets.
Because some people have, and they've actually done quite well, haven't they, in the socially responsible investment area?
That's right. There's nothing wrong with that area. But this is not, in that sense, a socially responsible fund. However, many people would say the fact that you're giving all the fees away to charity is a different form of social responsibility.
Without doubt. There are many definitions of social responsibility. Now, let's... I'm sure a lot of people would love to know what's going on in your head when it comes to what's going on in the market. Do you think we're in a suckers rally and we're going to go back past those March lows?
Well, it's very hard. You know, you'll hear people say all the time it's very hard to predict the short term. Yeah. What I do think is that things are recovering, but I've always thought the slump in the share market and the recovery out of it there's three factors that you've got to look at. Those three were the credit markets, which went into a tailspin, so they had to thaw and we had to come out of that. That's one factor, and they're still not back to normal by a long shot, so that's taking its time. The second factor I always thought was to get your mind around the slowdown in growth across the world and the recessions of various parts of the world economies and how long that might go for and how deep it would be. So that's the second aspect.
And where do you think that is now? Do you think we're getting past the worst of it around the world?
Look, we're probably off the bottom, but one of the features of this market, we're in the stock markets, is the volatility is unbelievable. When you can go up a number of percent one day and down a number of percent the next day, that's quite unprecedented in history, except for the last couple of years. But the third factor, I think, is really the aftermath of both the credit crisis and the recovery and looking at the slowdown growth. And that is governments have all spent a lot of money to try and stimulate things. That money's got to be paid back. That's going to have some slower dampening measures on the economy. I think consumers in general across the developed world have probably had a hell of a shock, and I would predict that their extent of credit will be much lower, and their consumption would have to be lower. I also think the amount of regulation that will inevitably new regulation that will inevitably appear will dampen things also. So I think there's a number of dampening factors that mean probably the last 20 years, with the exception of the last couple, so those fantastic rates of returns for the last 20 years and growth in the real economy, I think they're long gone. Okay, so over the last 10 years or so, we got used to 3% plus growth, didn't we? Close to 4%, and we saw the stock market. If anyone did a 10-year average on the stock market before the crash, we're saying that stock markets go up at 10 or 12% per annum. We don't say that now. So even if the consumer comes back and we're limping along maybe at 2% growth, Chris, do you see stock markets achieving 5 or 7 or 10% growth? Which is disappointing compared to the 20% and 30%. Yeah, look, numbers like that probably could well be in the ballpark. I think, again, the double digits are highly unlikely. I mean, we'll have periods of it, but, what the last couple of years has taught us, has shown in particular, that people are now looking at investment markets in a historical perspective beyond just the last 20 years. So, you've seen many commentators looking at markets since even the 1890s and through the Depression and when bonds were once popular. So, our sights have gone back. We're seeing markets can have significant changes and other asset sectors come into play. But generally, lower growth will mean lower returns in stock markets.
Now, there was an equity analyst survey by the AFR a few weeks ago, and the consensus was that we'd creep up to 4,800 on the S&P 200. Do you think that's a decided chance?
Well, I wouldn't have a clue in the short term what will be. I'd say it would be many years, a number of years before we would reach the highs that occurred before this collapse. But I just give up trying to predict the short term. What I do like the thought of, and this is how I try to run Third Link Growth Fund, is I'm looking at returns over rolling 5-year periods. So where we are in the cycle of things is a pretty nice spot to be in for a stock market investor. We're generally well below the long-term trend of our markets at the moment. We're probably not as great a value as it was back in March this year, but the upside looks pretty reasonable from a statistical point of view based on the past. So I think we've probably got some pretty good times ahead. And you've got to look too in terms of where else do you put your money. Investors have got to look at their own situations, but we know if you put your money in the bank at the moment, 3% isn't a big return, and
You've got to pay tax on that as well.
You've got to pay tax on that as well. So I think those factors come into play.
One last question before you go. And people would say I was weak if I didn't ask. I always thought the media gave you a tough go when you got that $33 million severance pay. You're now putting a lot of time back into the community. Has it been have you changed as a consequence of that experience, Chris?
Well, I guess I feel a little tougher on the media from time to time. Sometimes sensationalism does get in the way of facts. That was not an accurately reported story and still isn't to this day. But in any event, I think the experience has taught me a lot, but it's made me more worldly. I mean, you toughen up on things, but it's made you also realise how lucky you are, and to be putting back into society is a good thing. But I don't help the charitable sector because I feel I have to, or there's a monkey on my back. I do it because I enjoy helping people, but I also look back with great fondness of the growth of Colonial. That was Colonial First State is a company that started from scratch, is worth many billions now, and that was enduring value creation.
It was a part of the story that was forgotten along the way. Mate, thanks for joining us on Switzer. I hope you come back when you've got a good story for us.
Thanks, Peter.
Cheers, mate.